Hey, good day, everybody. This is Dennis Wilborn, the Active Trend Trader. Welcome to today's session of On the Radar. We're going to be taking a look at a couple of stocks that you may not want to own right now, but you may, if you know how to trade them to the downside, you may want to get short. There's a couple of different ways you can do that. I'm looking at some put debit spreads, or maybe I'll even do a call credit spread on a couple of these. And what are they looking like? We're going to share that with you shortly. Kind of interesting. COINBASE. Global, COIN is the ticker symbol. It had its, as you can see, it had its IPO today. It came and it bounced around everywhere. But it was going to open up about $250, and it actually opened up about 320, ran up to 420 and back. So this is going to be a very volatile stock. And do me a favor. Don't look at 1 day of the chart. We have 1 day's worth of data on this and go, oh boy, we've got a trend. It's going up. You don't know that. If you're going to trade the IPO, there's a couple of ways you can do it. One is just wait, or to start setting up what they call an IPO, pattern. Investor Business Daily does a really good job of calling those out. And so that's one way to look at it. But as I said, not going to run to the bank here. Here, let me show you what the chart looks like. There you go, right here. Hold on a second. Here's what it looks like. Here's the chart on Coin. A little bit of bandwidth. Coin. Got a lot of stuff looking ugly today. Be straight up about it. There we go, Coin. There you go. It basically actually opened here at 384, and then basically ran up to 420, 430, ran back down to where? About 309, and then it settled up about 328. Again, there's no pattern there. There will be, but it'll probably be about 30 to 40 days from now. So just hang on. Well, there will be time to get in. So hey, let's jump over to the indexes. That indexes are looking kind of interesting. Indexes are again mixed. We've been having a series of days where the indexes had been mixed over and over and over again. And as we see, that's exactly what we have going on with the spiders were down for the day. A couple of things I'm looking for and looking at. I'm looking at, do I have a reversal signal yet? Remember we talked about this yesterday. And the answer to that question is, if you look really close, yes, that is a bearish harami, which means the body of today's candlestick was within the body of the previous day's body, and therefore that's considered a bearish harami. That is a potential bearish reversal pattern. TSI rolling over, has not crossed to the downside yet, but will it? And we had pointed out yesterday, when it does cross to the downside, and that gives us plenty of time, because basically prices kind of bounce around and all that kind of stuff, but then we can start defining where we might want to take a trade in the spiders to the downside. We had gotten very much extended. Price actions had gotten very extended away from price actions have gotten very extended away from the 20-day moving average, right there. And normally, when you get that much of a extension away from it, it will time itself out where you'll get a pullback, a reversion to the mean, if you will. But as we've seen on S&P, what's happened is they typically have been overshooting the 20 and going on down to either the 34 or the 50s. The 50s running up this way, so that may be a downside target there. Will I plan a trade on spiders to the downside? I don't think so. And the main reason for that is because of this. Is because of the NASDAQ. NASDAQ put in a much prettier, if there is such a thing, a much a bullish, a bearish engulfing pattern, which is a little bit more, which is a little bit stronger than a bearish harami. And so I'll be looking at that for a potential move to the downside. How do I want to trade this? Well, that's quite simple. We want to basically be looking at, just a second. For whatever reason, I'm not seeing that I'm broadcasting, but I think I am broadcasting on. Yeah, there we go. And if you're joining us, thank you very much for being with us. And so, hey, I'll see how you're doing. So I like this, but how do we want to potentially trade it? Well, one, we closed the gap there. I'll be looking at a pullback towards the midsection of the body of today's candlestick. I have a TSI crossover. That is a bearish indication also. What's happened the last few times I've gotten crossovers? I've gotten really nice sell-offs. Now, am I expecting a fall all the way back down to $300? No, not necessarily. But where I would project a potential drop, I'll just throw a Fibonacci on this to give us an idea of where it might go. And I can go from this low here, this last swing low, up to yesterday's high, which is now a swing high. Lay that in there. Where am I anticipating it going? Well, price actions tend, once we've got a nice healthy move like this, they tend to come back down into the what I call the magic fib box, which is drawn in there like that. And that is the 38% retracement on the top, 50% in the middle, and a 618% retracement there towards the bottom. That makes up the bottom of the fib box. Anticipate a pull back into there. This also makes it a very good, this makes a opportune place to potentially take a trade on a pullback into the tomorrow, a pullback into the midsection there. Because if I'm wrong, let's say that this is a fake out move where that bearish engulfing will be voided. Well, it puts me closer to my stop loss. And so I can lay on a call credit spread. And what would I be looking at doing? I'd probably be looking at doing a call credit spread of probably 38 $38 by 2 to 3 to $5 wide. And but I will anticipate price action taking me through the spread. And so that's the way I like to do my spreads. I like to do my spreads to where the price action will take me through the spread. That way I can collect a little bit more premium, and it works out better that way. I'm looking for a 1-to-1 risk reward on my spreads when I do them like that. Okay, so that's what we've got going on the Qs. Do I want to be looking at something on the leverage ETFs? Let's go to SQQ. Do we have a reversal signal? And the answer to yes, we do. Now, it has also the TSI crossing to the upside. So SQQQ could provide us an opportunity, if you don't want to trade the options, to jump on a trade on that. If a pullback down into approximately the middle third of that candlestick right there, the stop loss would be like 15 to 20 cents below that level there. What would that work out to as far as a percentage point? It would be approximately, let's grab this, if I can grab the section. So that would give us a stop loss in there about 2, 3, 4%. So that's reasonable. keep it as tight as possible. With the expected, where might it run to? Well, if we do get a strong reversal, the potential of a run would be from about the midsection there. I would say at least back up to the 20. So we're talking about somewhere between 10%. If it pushes back up to past resistance, we're talking about 17 to 18% on a trade like that. Now, the Russell was, first I would say, the Russell appeared like it was stronger than the other indexes today. Price action jumped above, we talked about this yesterday, this spinning top kind of hammer kind of a candlestick yesterday off of the 50-day moving average. We had a breakout, and then after the breakout, we spent most of the day going downhill. That is not a positive thing. So while yes, we have a tick up in volume, a lot of that volume was part of the sell-off. I'll show you what that looks like on a intraday chart. As you can see, here's the beginning of the day, real hard run up, excellent, excellent. And this is very much the way a weak market acts. You'll get acts. It will basically give a big strong push up in the morning and then spend the rest of the day kind of selling off. And that's exactly what we had going on there. Hey Mel, how you doing? Thanks for joining us. And that's exactly what happened as we sold off. So spring-loaded start and then selling off the rest of the day. So IWM, how do I like it? I think, well, as you can see, the breakout was a fake out. If I'm going to try to go short, I like the potential with the Qs better, simply because they just, it's further away from the moving averages, and therefore the distance to fall is, better than or larger than the amount that we would expect on the IWM. Now let's take a look at a couple of stocks we were looking at yesterday, and as I said, the COINBASE Global. That's they are a big entity in Bitcoins. I think they're one of the major bankers that utilizes it, or so it came on, did its IPO today, came open, going to trade it or be trading it yet. But what I find very interesting is some of the other Bitcoin and blockchain stocks like Marathon. We talked about Marathon yesterday. What did it do today? Well, pow. We talked about this flag yesterday, and it broke. Now that it's broken to the downside on strong volume, as you can see, well, how do I want to potentially trade this? Well, I can be looking at a pullback into, I'm going to put in a pullback of about $46 and $46.60, maybe $46.40, just at or slightly above the 20-day moving average. That's where I would look at, go ahead and you can short this stock. It is easy to borrow, so you can short it. Or I like the idea of doing a bull put spread on, a bull call spread, and taking a potential trade to the downside on that. And just and I would go out about a week and a half to 2 weeks, either next Friday of next week or the week after that, to basically open the position. This does have weekly options. So this is it's a beautiful classic move. Push higher, fall, rally attempt, fail. Now we're dropping down. We do have to keep in mind that we are holding above the 34-day moving average, which is a strong part. However, a retest back up into this area here may give us the momentum to go ramming down through the 34 and reach at least to the 38. If I'm doing a credit spread here at about 46, I would be looking at probably probably the 45 by 40 or 45 by 42.5 out 2 weeks from now if those strike prices are available. We have joined us here. So last person, hey, thanks for joining. I can't read your name on the screen, but thanks a lot. If you need any, if anybody has any stocks that wants to take a look at, just drop a note in there in the comment section. I'll get that, and we can take a look at a potential stock that you like. So, what else do we have working here? I want to keep my eye on Tesla. I want to be an owner of Tesla in some, at the same time, though, I am not going to get, all jazzed up about Tesla, because what we've got is, while we have had a nice strong move up to the upside, this is a bearish pattern. This is what's called a dark cloud, where it's basically come down, open above and then came down over yesterday's price action more than halfway. CSI looks like it wants to roll over, as you can see, selling slightly, outpaced buying yesterday. So what am I looking at? While this has given us a really strong move to the upside on Tesla, good news about Tesla, we may get a stacked kind of pull back down into these moving averages. We have earnings coming up when on the 26th of April, which is Monday, week after next, after the market closes. So we may get into a little bit of a earnings run, but look for, Tesla likes to flag, folks. And so just what we have to do is be patient and wait for the flags. And what do the flags look like? Well, this little pullback right here is a perfect example of a Tesla flag. A little pullback right there over a 5-day period. And this was very controlled, very, not a lot of, big price action. As you see, the volume also dried up, and then pow, it exploded out of there, ran hard. I mean, it ran from below 700 up to today. It hit, I think, 780. So about an $80 move, which is excellent. So that's what we got going on Tesla. I'll run over here and jump over the last. And then these other stocks are, two of them are in the same industry group. So I wouldn't trade both of them, but I want to choose one of them. And again, this would be a downside trade, guys. I mean, this excellent bearish engulfing on Square. I mean, Square is a great stock, but because it is so far away from the 20-day moving average, how far is the midsection away from the 20-day moving average? Well, I can go up there and let me grab it to about the middle, and it was about, as you can see, about $20 away from the 20-day moving average, which that's enough. That's enough juice or enough dollars or spread to be wide enough to be able to make a nice option trade to the downside. Now, I wouldn't be shorting Square, but again, it is like the other one. I can take a trade, a bearish option trade right there in the middle of today's body. My stop loss is going to be just immediately above the high. And it will be a credit or a debit type spread out about 2 weeks. I want to make sure that though that I would not be running into earnings, and earnings on SQ is when? Right there, 5-6, day 6. Next one, same industry group, PayPal. Excellent bearish sell-off today. CSI has crossed, so any kind of a movement back up towards about 270 would give us an opportunity to get in. But again, the stop, and I wouldn't go like a penny above the high. I would go about 50 cents to even a percentage point above the high. I like 50 cents. and that'll normally keep you out of the crosshairs of the market maker. So that's that. And then let's jump over in. Last one I wanted to cover for you is CRM, Salesforce. Again, each one of these are great stocks, but each one of them looks like, hey, I want to do a pullback of several days. And so normally when they do a pullback, they're probably going to go 3, 4, 5 days, and I'll be watching for that. Now this one a little bit more precarious because it's right there at the 200-day moving average. Watch for the moving averages to catch it, but if I pick up right in the middle there, grab a position as prices run up back up to the middle there, and then I would anticipate a move down. And this one's only going to be about $7, $8 worth of downside, and that's okay because we can do a $2.50 to $5 wide spread on that to pick up some change or some cash on that. So that's what we've got for today. Remember, if you're watching us, thanks for joining us on Instagram. We go live, and so hey, Kenny, how you doing? You're finally up high enough where I can see. Anyway, if you're joining us on Instagram, great. Do me a favor, basically just let other people know that we're doing this session live on Tuesday, Wednesday, Thursday at approximately 1 o'clock Pacific time, just after the market closes. You will get fresh information about the market and an unabated technical analysis of where we think things are going. And then we'll find out the next day whether or not they in fact go there, based on, and that is based on my 30 years of technical and analyst experience and training. And then if you can't catch it here, watch it over on the YouTube channel. My YouTube channel is Market Tech Talk. And if you have not subscribed to that, please subscribe, hit the bell, and that way, and also share the video. Please share the video with everybody you know. No, just with people who might want to learn how to trade some stocks and are looking for somebody who has a great, outstanding, top-notch growth stock watch list, which we do at Active Trading with the Power Rank Elite watch list that we put out on a weekly basis. So with that, hold on just a second. I'll bring in this handsome guy again. There he is. So, hey, have a great rest of your day. Again, we'll be live again tomorrow, same time. And again, thanks so much for your comments. If you do want me to take a look at a particular stock, though, drop a comment, leave a comment, and also or leave a comment in the comment section at YouTube. So until tomorrow, aloha. God bless everybody.